Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problem on agricultural income. In this video, 10th and 11th problem I'm going to explain. Already 9 problems I've completed in the last videos. If you have watched the earlier videos, now you are in a position to understand the provisions of Income Tax Act regarding the taxability of agricultural income. So one video I have completely prepared on theory regarding the provisions of agricultural income. And 9 problems so far we have completed. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject Advanced Aspect of Income Tax. Watch the videos on agricultural income. Then only you can be able to understand this video properly. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready. Take a screenshot of the solution of 10th and 11th problem I have written on the board so that you can have a permanent copy of the solution. Then I'll explain in detail the problems 8th, 10th and 11th. Come on, see the 10th problem. Mr. Samia, age 50 years. 50 years means non-senior citizen. Below 60 years, an SSC is called a non-senior citizen. And the basic exemption limit for non-senior citizen for the current assessment year 21-22 is 2,50,000. For non-senior citizen, basic exemption limit 2,50,000. For senior citizen, those who are 60 years and above, they are called senior citizens. Basic exemption limit 3 lakh. And super senior citizen, 80 plus years, they are called super senior citizen. The basic exemption limit is 5 lakh for the current assessment year. So here age is given 50 years, non-senior citizen 2,50,000 basic exemption. Is owning 6 acres of agricultural land and a house situated at a farmhouse in the village of Kanpur of Nirmal district. The following particulars related to the previous year 2021. Calculate his tax liability for the current assessment year. So we are required to calculate the tax liability of this Mr. Samia for the current assessment year. Now income from house property 4,80,000. This is non-agricultural income. Then agricultural income 60,000. That means this SSC is having agricultural income and non-agricultural income. Agricultural income is 60,000 and non-agricultural income from house property 4,80,000. Long-term capital gain 1 lakh, winning from lottery 50,000, deduction under section 80 30,000. See, first of all, long-term capital gain. In the coming videos, I am going to explain about the long-term capital gain. The long-term capital gain is separately taxable at a flat rate of 20%. When I give the lecture, always I suggest my viewers to keep a notebook beside you and a pen. So whenever I say something, immediately you should note down. Then only you can get the complete command on the subject. Otherwise you will forget it. Because so many provisions are there in Income Tax Act. So here, long-term capital gain. The tax on long-term capital gain is at a flat rate of 20%. Separately we have to calculate. And winning from lottery. Winning from lottery is a casual income. Again, a flat rate of tax of 30%. So winning from lottery 30%. Long-term capital gain 20%. Both these are called special incomes because they have separate rate of tax. Flat rate of tax. Then deduction under section 80. Now deduction under section 80 will be deducted from other incomes, other non-agricultural income. Here non-agricultural income is income from house property. So income from house property 4,80,000. This is the non-agricultural income. From this income only we can deduct deductions under section 80. So deductions are 30,000. So 4,80,000 minus 30,000. So 4,50,000 is the non-agricultural income and agricultural income is 60,000. When agricultural income is more than 5,000 and non-agricultural income is more than 2,50,000, then we can club. Clubbing provision will apply, integration provision will apply to calculate the tax liability. Now see here, computation of total income of Mr. Samia for the assessment year 21-22. Agricultural income 60,000 directly given. Now income from house property 4,80,000. From this we have to deduct the deductions under section 80. Remember, deductions under section 80 will not be deducted from long-term capital gain from casual income. It will be deducted from other incomes. So income from house property 4,80,000 minus 30,000, 4,50,000 is non-agricultural income. Now we combine. When we club agricultural income and non-agricultural income, in that case 3 steps we apply to calculate tax liability. The first step, tax on total income. Total income means agricultural income plus non-agricultural income. Agricultural income is 60,000, non-agricultural income is 450. So 60 plus 450, 5,10,000 is the total income. On this 5,10,000 we calculate the tax liability. As usual, slab income rate tax. The basic exemption limit is 2,50,000. The first slab up to 2,50,000, income is 2,50,000, rate of tax nil, amount of tax nil. The second slab goes from 2,50,000 1 rupee to 5 lakh. From 2,50,000 1 rupee to 5 lakh. So 2,50,000 1 to 5 lakh, income will be 2,50,000. The rate of tax is 5%. So 5% of 2,50,000, 12,500. Now the next slab goes from 5 lakh 1 rupee to 10 lakhs. Third slab. 5 lakh 1 rupee to 10 lakh. But is our income going up to 10 lakh? No. Our income is only 5 lakh 10,000 only. So I am taking the balance. I am taking the balance. The total income is 5 lakh 10,000. From 5 lakh 10,000 deduct the 2 slabs. Minus 2,50,000 minus 2,50,000. The balancing figure is 10,000. On this 10,000, 20%. So 20% of 10,000 is 2,000. Remember, first slab is 0%. Second slab 5%. Third slab 20%. The total will be 12 plus 2, 14,500. 14,500 is the tax on total income. Now second step, tax on exempted income. Exempted income means agricultural income plus basic exemption limit. The basic exemption limit is 2,50,000. Agricultural income is 60,000. So 60,000 plus 2,50,000, 3,10,000 is the exempted income. Now we calculate tax on 3,10,000. First up to 2,50,000 slab, 2,50,000 income, nil. Second slab goes from 2,50,000 1 to 5 lakh. But is our income going up to 5 lakh? No, our income is only 3,10,000 here. So I am taking the balance. So 3,10,000 minus 2,50,000, balancing figure is 60,000. On 60,000, 5%. It comes to 3,000. So 3,000 is the tax on exempted income. The first step we have calculated tax on total income. Second step we have calculated the tax on exempted income. Third step, income tax is equal to tax on total income minus tax on exempted income. So here 14,500 minus 3,000. So 11,500 is the income tax on normal income. Income tax on normal income is 11,500. To this we add special incomes. The special incomes are LTCG, long-term capital gain, 20%. So long-term capital gain, it is given 1 lakh. In the problem it is given 1 lakh rupees LTCG. So 20% of 1 lakh, 20,000. Add up 20,000. Then special income is the casual income, winning from lottery. Winning from lottery is a casual income. The rate of tax is 30%. So 30% of 50,000, 15,000. Add up 46,500. So we have got the normal income, special income LTCG, special income casual income. We have added. Now 46,500. To this we have to add health and education cess, 4%. Every problem, mandatory, every case, whenever we calculate tax liability, add 4% health and education cess. So 4% of 46,500, 1860. Add up. Tax liability is 48,360. From this 48,360, we deduct the TDS on casual income. Because whenever there is winning from lottery, the issuing authority will deduct the TDS and net amount will be given to the assessee. So we assume that already TDS was made on winning from lottery. So what is the tax on winning from lottery? Tax on winning from lottery 15,000. 15,000 was the tax on winning from lottery. So we assume that this 15,000 was already deducted by the issuing authority at the time of giving the winning from lottery. So already 15,000 rupees was TDS. So deducted. TDS on winning from lottery, this 15,000 we deduct. So now tax due is 33,360. Ultimately, the tax payable due is 33,360. That's it. So this is the complete problem number 10, where we are required to calculate tax liability. That's it. Now, 11th problem I am reading out. Mr. Darubai, a resident individual of 60 years age, submitted the following particulars related to the previous year. 60 years of age means the assessee is a senior citizen. Below 60 years, non-senior. Previous problem, non-senior, because below 60 years. Now exactly 60 years. So 60 years or more, up to 80 years, the assessee will be called senior citizen. For senior citizen, the basic exemption limit is 3 lakh. So here I have written, Mr. Darubai, age 60 years, senior citizen, basic exemption limit 3 lakh. That point you have to remember. Now, calculate his tax liability and tax due for the current assessment year, just like the previous problem. Income from other sources, 4,50,000. Agricultural income, 1,50,000. Long-term capital gain on gold is 1 lakh. LTCG. It's a special income on which there is a flat rate of tax of 20%. Then short-term capital gain on shares, 40,000. Again, a new point is there. Short-term capital gain arising on shares, on sale of shares, is also taxed at a flat rate of 15%. It is not normal income, it's a special income. LTCG is taxed at 20%. Short-term capital gain, STCG, on shares will be taxed at a flat rate of 15%. Now, casual income 60,000 and deduction under section 80, 20,000. Remember, this deduction under section 20 cannot be deducted from special incomes. It will be deducted from normal income. Income from other sources are given 4,50,000. That is the normal income. From 4,50,000, we deducted 20,000 deductions under section 80 to get non-agricultural income. See, income from other sources, 4,50,000 given. From that, we deduct deductions under section 80, 20,000. So non-agriculture income, 4,30,000. Agriculture income is given 1,50,000 here. Agriculture income, 1,50,000. So agriculture income is more than 5,000 and non-agriculture income is more than 3 lakhs. So clubbing provision will apply. Aggregation provision. Step 1, tax on total income. Total income means agriculture income plus non-agri. Agri is 150, non-agri is 430. So 150 plus 430, 580. Now we have to calculate the tax on 580, 5,80,000. Slab income rate tax. The basic exemption limit for senior citizen is 3 lakh. So up to 3 lakh. Up to 3 lakh. First slab, income 3 lakh, rate nil, tax nil. Second slab goes from 3 lakh 1 rupee to 5 lakh. 3 lakh 1 rupee to 5 lakh. So 3 lakh 1 to 5 lakh. The income is 2 lakh. This 2 lakh, the rate of tax is 5%. So 2 lakh 5%, 10,000. Now we'll take the balance. Because next slab goes from 5 lakh 1 to 10 lakh. But is our income going up to 10 lakh? No. Our income is only 5 lakh 80,000. So I'm taking the balance. So 5 lakh 80,000 minus 5 lakh. So 80,000 is the balance. 20% tax. 16,000 is the tax amount. Total 26,000. 26,000 is the tax on total income. Second step, tax on exempted income. Exempted income means agricultural income plus basic exemption limit. So 1,50,000 is the agricultural income and 3 lakh rupees is the basic exemption limit. So 4,50,000 is the exempted income. On this we calculate the tax. Slab income rate up to 3 lakh, first 3 lakh nil, then balance. Because second slab goes from 3 lakh 1 to 5 lakh. But is our income going up to 5 lakh? No, our income is 4,50,000 only. That's why I am taking balance. So 4,50,000 minus 3 lakh, 1,50,000, 5%, 7,500. 7,500 is the tax on exempted income. Step 3, income tax is equal to tax on total income minus tax on exempted income. Tax on total income is 26,000 minus 7,500. 26,000 minus 7,000, 18,500. This 18,500 is called tax on normal income. So tax on normal income is 18,500. To this we add special incomes, LTCG. Tax on LTCG, long-term capital gain is 1 lakh. So 20% of 1 lakh is 20,000. Add up. Then tax on STCG, short-term capital gain on shares. The rate of tax is 15%. So here amount is 40,000. So 15% of 40,000, 6,000. Add up. Then tax on casual income. Here casual income is given 60,000. The rate of tax on casual income, just now I told you in the previous problem also I told you 30%. So 30% of 60,000, 18,000. Add up, you'll get 62,500. As usual, 4% is the health and education cess. So 4% of 62,500, 2,500. Total is 65,000. Now, according to the provisions of Income Tax Act, TDS will be made always on casual income. Always on casual income, TDS was already made. So how much was the tax on casual income? 18,000. So we assume that this 18,000 was already deducted at source at the time of winning from casual income. So 18,000 we deduct. The remaining amount is 47,000 is the tax due. So I have completed 10th and 11th. 2 problems I have completed in this video. So one information I want to give, I have started a new channel by name Khan's Accounting Institute. This channel I have made mainly for IGCSE students. Those students who are pursuing IGCSE like Cambridge or Edexcel. So for them, this second channel is very, very important. I suggest my viewers to visit that channel, Khan's Accounting Institute, and watch the videos. Definitely you can be able to enhance your knowledge. And do subscribe that second channel also. Inshallah, we'll continue the next problem in the next video.